Good evening. I'm Epstein, and here we are on Valentine's Day, Wednesday, the 14th of February, 2024. Happy Valentine's Day, all. Time about 6:10 p.m. Central Time. Interesting day. Got the rally that I was looking for from key areas in the stock indices, by the way, but it proves nothing. It tells me that the market may be in a distribution area at the top up here, and maybe it is time for the market to either consolidate or give some more back. Wouldn't surprise me in any manner. We have a lot of data coming out, though, tomorrow that's going to impact, be it the metal markets, the dollar, what foreign currencies do. So let's get to it right now and take a look at it. You're going to get the jobless claims. Now, I want to say something about that. Are you noticing how many corporations on these earnings are letting people go? Cisco today, about 4,000 people they're going to let go. So there's a change that's happened. And big companies aren't scared to let go of personnel now. That wasn't the case just up until this quarter. So while we may be still getting these numbers here, there's something happening in the economy. And it's probably a mixture of, number one, the corporations want to keep doling out money to the shareholders. Number two, we've had a heck of a rally. Number three, they're probably comfortable that if they had to go to the marketplace, they could replace these people. That's different. So we'll see what they say. The Philly Fed regional business activity, well, we know it's been terrible, so let's see if it gets any better. Same with Empire State Manufacturing Survey. I mean, so far, the industrial side of the market's been a dog. Advanced retail sales for January. Did the consumer slow down? That's going to come out at 7:30. Look at all these at 7:30. Same thing with import-export prices. Get up early. There's going to be a lot going on. Then we get the Federal Reserve in the 8:15 timeframe. They get monthly industrial production and capacity utilization. That's one thing that we keep hearing that the different Fed bankers are mentioning, capacity utilization. Do we need as many people? Are we getting more with less hours work? Things of that nature. You want to look at that. National Association of Home Builders, that'll come out with their monthly housing index, and that'll be at 9 o'clock. So you got your hands full there. All right. So as I said, today, I wrote last night in my newsletter that the break yesterday was very typical of just a normal break at these high levels in stock indices. I haven't changed my opinion. However, none of this takes me away from being super bullish on the dollar still. And the reason is, don't know where we're going yet. What do I mean by that? Well, we're going to get our PPI numbers coming out this Friday. Then we're going to get PCE on February 29th. It's this leap year, so you're going to get that extra day in February. Be aware of that. Let's take a look at gold and see what it's done. First, it is down 1.63% going into the latter part of the week now. Okay, and more important, it's staying under, so far, the 18-week moving average of closes. The breakdown hasn't caused any real bounce to speak of. Yes, you get intraday little bounces, but this is not a change is what I'm seeing. The trend is clearly to the downside. The market is now staying under very easily, both the 200, the 100-day average. That's a signal things aren't good. And now you got to be your eye on how fast is the 18-day average going to fall down to that number? That is something you got to keep your eye on as a technician. And you've now got two closes that are underneath the Bollinger Band. So you've pulled this rubber band a little bit, and it can bounce back in here. But I'm looking at the 2023 area as the first resistance point on the chart. You'd have to get over 2047.30 in order to negate the downtrend, and you are oversold. So it fits in, at least in my head as a technician, that we could get a bounce in the market to just get to the right-hand side of the Bollinger Band. In the gold silver, it's just back and forth all over the place. So right now, it's coming back down. If it stays like that, then I have to change this whole chart to silver because that tells me that a double top is in place. And now we could get a market that comes down even more. Well, is that a story that silver is getting better? I don't know. But notice how silver, unlike gold, does pay attention to the Bollinger Band and you're getting a bounce. I'm not saying you're trending. You have a higher high and a lower low and you're oversold, but it is paying better technical attention to that band, which is all important than anything else. Resistance back at 22.72. In the copper market, we will end this lunar holiday, and then by Saturday, things will be rolling in China again, and we'll see if orders come in and just where they're going to be. But you have layers of resistance starting at 376 right on up to the combination of the 200-day average at 379.25 to 379.35. So you can see your areas there. However, to get to those areas, you break the downtrend. You'd have to break the pattern of lower highs, lower lows. And ever since you hit that Bollinger Band bottom, did that not stop the market just like that? I think so. And you're oversold. Oversold markets correct in one of two ways. They embed, where both numbers decide to go sideways under 20. And if you've taken my enhanced Bollinger Band course, and I'll talk about that in a minute here, that is what you want to learn from as to which way. Or you get the rally back up as the market corrects itself. We're going to find out which one it wants to do. In the platinum market, be careful here. If you're playing the bear side and this market gets over 906.80, the story is you could be lifting this market back into an uptrend that goes first to the 924 area, potentially as the 100-day average of resistance and maybe even the Bollinger Band. So suddenly the silver market and the platinum could, I didn't say anything more than that, could be getting a little better chart picture, but neither are in uptrends at this point in time. Last, we get to the dollar index, and on the break from yesterday, you can see how the market's come all the way back up. It challenged yesterday's highs. It's hanging at the Bollinger Band. It is an overbought market, not in a trend, but it could accelerate at any time. What do I think it's doing? I think it's marking time to the PPI report this Friday. So be ready for that. But of course, everybody's going to look at jobless claims and the other reports we just saw. They're going to be super important. You hear me talking all the time about these Bollinger Bands. Learn how to work with them. I have a full course on it. I explain it in the ad following this. It includes, by the way, 2 weeks to both my Spider and my Morning Futures videos because I teach you, and then I keep showing you in real time what is going on as I'm recording first thing in the morning with trade recommendations. I want you to buy here. I want you to sell there. This is where you do that. This is where you come out. This is what you do. All that. The charting software, the video course, and it is a video course. It's easy. You'll master it in one afternoon, and then you have to apply it. That's the trick, learning how to apply. But you'll be able to get through it in one afternoon. That's how I built it. I want you to learn what that does. So how do you do all this? Well, number one, you can just click up here. There'll be an icon, and that'll take you to the education part of IraEpstein.com, or you go to IraEpstein.com for education. Take a look at this. Educate yourself. I'm Ira. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.